Everybody, thank you everybody for joining us. Looks like we got a full house, and we have Brad Overland from Movement Mortgage. How you doing, my man? Brad's been a friend of mine for a long time, and he's one of the hardworking mortgage person I know in the Seattle area. And I just wanted to introduce you to everybody. And how you been, man?
And getting through it for sure. It's a lot of
Yeah. Exactly, and I just wanted, looks like look, man. Whenever this thing started with the COVID situation, and I saw a lot of mortgage people saying, "Hey, you know what? We're gonna be." I mean, I know some mortgage people who just actually said, "You know what? I'm just gonna stay home. I'm not gonna do anything. Just wait it out." Okay, and that's crazy to me. That's absolutely just insane, because this is the time, I believe, that where you need to learn how to do things and change it, because something's going on. And let me ask you a question: can people still buy homes right now?
Oh,
Talk to me.
absolutely, man. We're actually, aside from the refinances, the lenders that are staying at it and not staying home doing nothing are having record months because more buyers are winning deals right now, less competition.
Less competition. So if you have a buyer or you want to buy a house, that's just consider that you can actually right now get a better deal, probably, right? So let's not talk about the refis. We understand refis is a different ball game. Let's talk about people who want to buy a house right now. I understand information changes daily, and there were times where interest rates were changing daily. How's the situation nowadays? Talk to us.
Just look at the stock market. You can see how much it shifts in one day. It's still happening, but it is settling down. What started the whole thing was with COVID over in China specifically, you started to see the rates come down.
Yeah.
As the rates came down, the market flooded with, of course, refinances, but purchases as well. And what happens is lenders hedge their bet so that if they lock a rate with the client for, let's say, 3.5, and when they go to sell that loan on the secondary 30 days from then, after the loan is closed, the rate is 4%. Well, the lender doesn't want to get stuck paying the points to get that rate back down for the client. So they hedge their bet on the secondary. Well, what happens is when that much volume pours in, the investors that they hedged with said, "Hey, we don't care that you're selling your loan off in 30 days. We want our money." And we
Exactly. Yeah. So that was the problem for I think, and I heard some economists predicting that there's going to be a problem in the mortgage industry unless the Feds come up with some sort of solution for that, because they need to be able to to move the cash, and a lot of people right now are going to be in forbearance. And how is that going to affect everybody's buying power?
So there hasn't been very clear answers from Fannie Mae, Freddie Mac, and Ginnie Mae yet on what they're going to be doing, but I have heard that they're going to allow the servicers to avoid paying 4 months worth to the investor. So the 3 months worth that the client typically will be able to postpone, not waive.
Yeah.
Will all be due, but at least the servicing company doesn't have to continue to make payments to that investor. And that's where the liquidity issue was going to be. So they have lightened up on that. So that should help things a lot. Well,
everybody, I have agents who, trying to work with buyers, and buyers say, you know what, I'm probably going to just wait out until buying, because most likely we're going to see the same thing like what happened in 2008. Prices just went down. Do you anticipate anything like this because of the mortgage industry? Something going to be happening? Because
the only reason I could see anything happening in the housing industry would be because of jobs. Nothing mortgage related, specifically jobs related. If people have their jobs, are still getting paid, furloughed, I think the housing market will it might, let's say it won't increase at 5-10%. It's going to slow down a little bit, but it's still a positive increase.
Yeah, and
mortgage will have nothing to do with that, I don't believe.
And also, we have those people who are on webinar. I wanted to remind you guys, you can ask questions. You can type up your questions. I'll read them out to Brad, and he'll be able to answer them for you, especially agents who are working with buyers right now. So basically, and also I heard, this is again just rumors. I heard that right now the requirements been stiffer. Chase changed the requirements for the FICO to be 700 and 20% down payment. So what happened to FHA people like first time homebuyers who don't have 700 credit score? What's up with that?
So I'll just go through all the changes that have been happening.
Yeah. Go for it. Right.
So first of all, what we had happen was DU, which is called Desktop Underwriter.
Yep.
That is Fannie Mae's underwriting system. We don't really know all the algorithms and how it works. It says you can be approved at 620 for a conventional score. That doesn't mean everybody with a 620 gets approved. So there's certain algorithms that are running there. Well, they tightened that up last weekend. So now when you would have ran a loan, let's say a week ago, and it was approved in the system, you run it again today, not approved. They're tightening up on reserves. They're tightening up on credit score. The whole picture, they're tightening up on everything a little bit.
So that kind of reminds me a little bit of what happened in 10 years ago when they were trying to tighten up the requirements. So yeah, prices went down, but not a lot of people could actually qualify.
From what I heard, what happened back then is they made these changes slowly.
Yeah.
I think they just snapped. It's done. They made the changes immediately. I think they want to stop any problems from happening sooner than later. So FHA is still good to 620. Now you're going to find that FHA allows 580 still. However, good luck getting that through the underwriting system.
Really? Wow.
And every lender will have an overlay. So just because Movement Mortgage has 620 and it might work, it might not. Another lender, let's say, well, Chase, I don't think the big banks do many FHA loans, but if they did, they might be at 680. There's an overlay depending on the company, on their appetite for risk.
Even though the FHA says 580 minimum, but depending on the kind of lender you go to, they're going to have their own overlay, because I understood. And what about down payment requirements? Has that changed at all, or it's still like 3.5 for FHA and 5% conventional? How does that work?
Correct. You're still going to get 3.5 FHA. You could, even if you qualify, go for 3% down conventional on the Home Ready. Fannie Mae specific 3% down. Granted, it's going to be a lot tougher to get qualified. You better have a high credit score and maybe some reserves, but it's still available. 3.5 FHA, 3% down conventional. Typically 5% is what you're going to find the run of the mill being for conventional. 0 down is still there for.
Is it really? Wow.
For USD.
Wow.
VA.
VA and USD, right?
Now that's another one that you'll see the Washington State Housing Finance Commission, the down payment assistance programs. They're still there, but every lender I know has put a pause on those for right now.
I heard it was gone. Somebody told me it's gone. It's not there anymore, but it's still there. But not every lender has it, right?
I've heard a couple lenders that say they have it, but everyone that I know tight is gone. They're paused. They said paused.
Okay, until further notice.
Exactly. We'll see how.
It's same like with a stay-at-home order. Until further notice. Makes sense, yeah.
What you're talking about with Chase is Jumbo has tightened up significantly. Our Jumbos went away for about a week, and then we were able to get them to work with us again. So we are also at 700, 20% down on a primary residence single family home for Jumbo. But you got 12 months reserves typically, and the debt ratio is still the same, 43% debt ratio. So they haven't tightened up too much, but they did 20% down. We used to have a 15 and a 10. No more of that.
So no more, like, you cannot get a second loan like for 10%, like you want to buy with a 10% down payment. You can get a second loan like 80 10 10 basically. You cannot do it anymore.
You can. That's our workaround right now, because that's not a jumbo loan anymore, right? That's a conventional first.
No, it's still going to be jumbo. Let's say you have $1 million home and you only have 100,000 down payment. Can you buy it? Can you buy $1 million house with a 10% down payment? That's the question.
That first mortgage, you're going to need to put down your 10%, and that first mortgage needs to be under 741.
In order to be, yeah. Got it. So it has to be, conforming?
Correct.
Yeah.
It's $1 million loan. If you only have 10% down, let's see. Yeah, that's going to be tight. You probably got to get to 741 on that first.
Unless your first becomes jumbo.
Then your first becomes jumbo over 741. Can't do it.
Has to be 20%, right?
Correct.
Oh, interesting, interesting. Because before this whole pandemic, happened, I saw a person buying $1.6 million house, putting 10% down payment, getting 80% for the first and 10% as a HELOC.
Yep.
So can't
Yep.
do that anymore, right?
Until further notice.
Until further notice. What about the reserves? Still 12 months reserves, right?
12 months typically is what we're finding.
Okay. So what do you see right now? I also heard again that people are, those who are employed, the employment verification is done like at the last moment, right? Like to the wire.
So again, each lender is going to be different. That's their own little overlay. Fannie Mae requires a 10-day, it's called a 10-day VOE. We switched ours to a 5-day VOE. And on top of that, we have to do a 48-hour as a loan officer verbal with the client to verify that nothing's changed. If they say something's changed, we have to report that, and maybe until further notice, they aren't going to get that loan until they get their job back.
So basically, anybody who laid off or furloughed right now is not eligible to buy, pretty much, right?
Well, they're not eligible to close the loan until they're verified employed.
Until they're basically back in the job, right? What if, let's say, somebody got laid off or furloughed and that person goes and gets a job at a different place?
Still should be good as long as it's a similar line of work.
Uh-huh.
We're going to base it on their new income. So if their income is dropped, we'll have to re-underwrite it.
Re-underwrite it, but if the income the same or more, it's fine? Yeah, okay. So
assuming that's base pay. If they went, some people will go from like a salary job, something that's mostly commission or bonus. That's not going to work because you need a 2-year history of that bonus, salary, commission income. I'm sorry, bonus and commission income. So make sure that if they're switching, it's going to be to a similar base pay.
Got it. Interesting. So basically, having a job pretty much what is the hang up right now for anybody who's looking to buy a house, Well, obviously.
Yeah, to go back to your point about is now the right time? I think it is the perfect opportunity for anyone that has a stable job. If they have a stable job, rates are low, less competition. It's almost a shoe.
So if you have buyers, so real estate agents, if you have buyers who are essential employees, if you have a doctor, you have a nurse, you have a grocery store worker, you have a truck driver, anybody who's actually working right now, you have a real estate agent who's actually working right now as a client, or yeah, if the person's getting income, it's actually still a good time to buy a house, and they will get qualified most likely, and you'll be able to put people into contract, because I don't know if it's got to be a lot of multiple offers now, but we've seen some multiple offers, still, so I guess it's interesting. What else been going on in the industry lately? It's been changing daily, man.
Well, what our CEO kind of made a really good a good comparison. It's like you're driving your sports car down the freeway at night, 100 miles an hour. Life's good, tops down.
Yeah.
All of a sudden, the street lights go out, your headlights go out. That's where we're at right now. It's so unclear right now what's going on in the secondary market, because when those rates dropped and all the margin calls became due and liquidity was an issue, the Fed stepped in and started buying mortgage-backed securities.
I saw that, yes.
Dropped the rates further, which made the margin calls higher.
Yep.
So backfired on them. So MBS Highway, Barry Habib, a bunch of people got on with the Fed and said, hey, you got to stop doing this. We have to reduce the amount you're buying to provide some liquidity for these lenders, because the margin calls are just getting outrageous. So they shrunk down the amount they're buying, and now you're seeing the rates be normalized again, where they kind of follow the 10-year Treasury note rate and the way that oil prices are, things like that.
Yeah, that's a little bit of that. Right now it's like zero,
So I think it's a normalization of interest rates in the next 30 days or so.
Normalization of, you mean the industry, or normalization of rates?
Normalization of interest rates. Because right now I could talk to a client and quote 3.5 in the morning, and all of a sudden something will happen on secondary and it'll be 3.75 without any notice.
So would you say it's better right now to wait, or it's better to start shopping for a house and maybe lock something in? Another question, can you actually lock the rate right now?
Yeah, that's another thing that a lot of lenders are having issues with. I talked to some competitors of ours or coworkers of ours, and
Huh?
they have a max limit that they can lock per day for their branch. So
Wow.
if you have some loans and you're up early in the morning and you get them locked, the rest of the branch is in trouble for the rest of the day, and they got to wait till tomorrow.
So it's pretty much like a PPP protection right now, that, hey, if you don't get your money in and if you don't apply on time, you're SOL. By the way, that's another question. Let's say somebody is working for a company and the company obtained the PPP loan from SBA and keep paying them salary. Is that still person considered employed for the purposes of the underwriting?
Yes, if that verification of employment from the employer states that they are working in the same capacity, same pay,
Mm-hmm.
we will fund the loan. Unless we hear that there's a projection that it may stop, the underwriter will probably deny that or put it on pause until they get a positive verification of employment.
Good. So basically, as long as the person is on payroll of that company, and it doesn't matter if the person is employed. I mean, it doesn't matter if the person is actually working, but as long as they're on payroll. Let's say it's a PPP, they don't lay them off, but they pay the money from the PPP funds. Then, and I'm sorry, PPP is Paycheck Protection Program from SBA. As long as they're getting paid, they should be good to go as far as the underwriting goes, right, Brett?
Correct.
Good. And I know you've been in with Movement Mortgage for quite some time, for a few years, I know, and you.
Past 7.
Yeah, and you guys, I know you have some really good programs. I know you used to have them like 7-day closing, whatever. Not anymore. What else? What kind of cool stuff you have right now that people can come to you and get qualified?
So we still do our underwritten pre-approval, and that's our goal is about a 6-hour underwrite. So we still underwrite our clients up front for a pre-approval. They will, depending on the type of loan, they'll prioritize it. Some borrowers they're going to give some priority to. We still do our 7 business day process on our purchases. Our purchases take priority. We are a purchase company from the get-go. So we still do our 7 business day closing, 6-hour underwriting, and 1 day. So here's the way we have what's called a 6-7-1. 6-hour underwrite, 7-day process, 1 day to close. So
Wow. Okay.
business days. Other than that, I mean, we're just a realtor-centric mortgage business we still focus on only agents. We do our refis, but our focus is always purchase.
Always purchase, right? Yeah. Okay. Good. And one of my friends who's also a lender, he's basically saying, on the refi, because a lot of people just rush to do refi because rates are so low, but they just basically have to raise the rates or just turn down a lot of people because of the amount of work that they have to. Simply, they cannot concentrate on that because they're doing, purchases. Is that what's going on with you guys too?
No. So what we just announced is that we are actually servicing our loans now. So we get rid of a lot of the loan level pricing adjustments. It's called LPAs. Our rates have gotten significantly better. But what happened in the very beginning, when all the rates dropped, everyone flooded in to lock their rate in.
Yeah.
A lot of lenders said, hey, stop the bleeding and raise the rates up a little bit to slow it down a little bit.
Of course.
We put a pause for about a week on some programs on how we could lock. We have to actually, for refinances, we had to wait till the appraisal was in just for a few days. And then we backed off and said, you know what, this is not a smart move. Let's continue on as normal. So we had a couple shifts there for a second to kind of get some clarity on what was going on, but we downshifted and we're off to the races again. Our rates are phenomenal. On all our programs. I even priced a jumbo out the other day, and it was in the 3s for this client, which I was surprised. I was expecting 4.
Wow, that's interesting. Yeah. So what about appraisals now? I mean, appraisals, are they still essential, or can they go do an appraisal, or you guys? How does that work? Same way?
Yeah. Well, a lot of times we're getting what's called a PIW, which is a property inspection waiver. That means the value that I put into the system. The system has enough data to verify that value I put in is accurate. But typically, yes, appraisers are essential. We're having our appraisals still I'll say 10 days to 14 days is our turn time.
Uh-huh.
Unless we order a rush, but yeah, it's business as normal for them. I will have some that will ask if they can do just exterior appraisal,
Like drive by, yeah.
drive by. And right now, Fannie Mae has not okayed that for us.
Got it. So basically, it has to be actual appraisal, right? Somebody has to go in there and do it, right?
Unless you get a waiver.
Unless you're getting a waiver. Good, good. All right. So far, what it looks like, Brett, that things are still normal, somewhat, and it looks like we have a question from Rena. Rena is asking, does I assume it's Movement Mortgage. Does Movement Mortgage allow refinance and get pre-approval same time?
So would you mean that it's a refinance to get cash to purchase a home for a pre-approval?
Rena, I can let you in to talk, Rena, if you want. So you could ask this question in the, I'm just going to have her. Rena, are you here? Can you hear us? Rena, I just allowed you to speak. You can unmute yourself and you could talk.
Oh, she's going to get a mic.
Probably going to get a mic, yeah. Oh, she said, let me get a mic, yeah. But it sounds like that's the question, And guys, if anybody wants to jump in or ask a question, please do so, or raise your hand, and I'll be able to loop you in here, so you'll be able to speak and ask your question.
The only thing as an issue is if I'm not sure what she's talking about, but if let's say they were doing a refinance on their current home as an owner-occupied residence.
Mm-hmm.
They were getting pre-approved to go buy another owner-occupied residence. That underwriter would probably have an issue because you can only have one owner-occupied residence at a time. And when you sign your deed, it says, I intend to occupy this home for 1 year. So the underwriter would question you to say, why are you owner-occupied refi right now? And right now you're shopping for another owner-occupied, not going to fly.
Okay. She says, okay, refinance the current home for lower interest and also get pre-approved to buy another home. That's what she's asking.
So you could do that, but you probably couldn't get away with buying another primary residence home. You could owner-occupy refi and at the same time get pre-approved to buy an investment home or a second home.
Can you do a bridge loan?
You could do a bridge loan.
Yeah, so you can do a bridge loan to transition from one residence to another one, right?
But that's not refinancing the first just to get a better rate.
Yeah. So you can't get away with that. Okay, makes sense. Okay, yeah, that's interesting. So let me just.
It's for the most part, it's still business as usual. It's just a little bit tighter than what we're used to. And I would say, in my experience, I started in 13. It was pretty tight in 13. It got a little bit looser throughout the.
I remember, yeah.
Years. And now it seems very similar to what it was maybe in like 15, 16, which was still great years. Lots of buyers. I think when did you start Nexus? Right around then, right?
Nexus started in 2015. Yes, that's correct. And but I started in real estate in 2012 when I just graduated law school and was waiting for my bar results and got into the real estate, and here I am. But yeah, so I agree. But interesting thing though, Brad. I saw the Economist comparing this situation we're in right now more of a like 9/11 than 2008, because 2008 whole industry was basically was not working and was fundamentally messed up. Let's put it this way. Where in 9/11, just one single event occurred that kind of tanked the economy. And that's what happened right now. One single event occurred that kind of tanked the economy, but in a weird way that everybody stopped working, So yeah. Okay, we have a question from Elena Bondrin. She's asking, do you think interest rates will go even more down within a couple of months? They're already at zero with feds.
Yeah, which the Fed rate doesn't have a lot to do with mortgage rates. That has to do with money, but they're kind of related. Our opinion, and this is part of the reason why we've gone to servicing our own loans, is rates will be dropping. If you look at all the indicators, it says that rates should be lower than they are. The reason they're a little bit higher than what we think they should be is because of the the not clarity on the secondary of what's going on. So we do believe they should be going a little bit lower.
So that's answers your question. So again, right now, what people are going to be listening to and say, okay, should I buy now? Or should I wait until Brad actually drops the rates?
My clients, buy now. If you have something good in your hand, is a 3.25% interest rate.
Oh yeah.
Is it worth the risk to jump up to 3.5 just because you want to wait for 3 1/8?
Yeah. I'd say exactly. Buy now, and if the rates really drop to like ridiculous level, then you can refi.
Don't miss out on getting that house in this market right now.
And yeah, and exactly. And same thing goes for the price. And let me explain to you my rationale about it. Before this pandemic hit, I closed on my own personal residence, okay, in Redmond. And frankly, it's a little bit on a higher price point. And I don't care if the price goes down right now in this, because I'm not looking to sell it.
Exactly.
And if you're looking for homes and you find a house and you see that you love this house, why do you care if the price is going to go down in, let's say, a couple of months? Because the reason, and my reasoning here, that house may not be even available at the price you want it to be. So if your objective is to buy the house that you can afford, and you can afford what you found, don't wait for the price to go down. Buy it now. If the price go down, you're still okay. You still got your house that you wanted to, okay? But overall, if you look at the history, how real estate goes, it's always going up, always going up. You know, yeah. And it's always going up. You're not gonna lose, okay? You may have a little, whatever, you're not going to be able to time the market. Let's just put it this way. You're never going to be able to time the market. If you found a property that you like, buy it now, get a better rate, okay? Don't wait for the price, because 2008 happens only once in 100 years, once in a lifetime, guys. It's not going to be as 2008.
But even look at 2008 though. Let's say in 2007, your Redmond house. What would you say your house sold for in Redmond in 2007? What was the value of your home in 2007?
I just bought a brand new construction here in Redmond, so
let's just say that house in Redmond was worth at the time $500,000.
Yeah, now it's 1.6.
Exactly, but in 2008 it was $300,000.
Yeah.
Here's what happened in 08, 9, 10, right?
Yeah, but I live in a house that I like, and let's say I live here, boom. If I want to sell it in 10 years, well, I guarantee the price is going to be way more than I paid for it. Even though it may take a little dip right now in a few months, you know. And I live in a subdivision where builders are still selling. They just resumed construction right now because governor just announced that you can go back, and I see construction trucks actually pulling in right now because it's a Murray Franklin home, and they were waiting. And I'm sure they probably paid somebody to do it.
The city inspectors I heard were off. We had one. We needed a certificate of occupancy. We just got it last week so we could close. That's all we were waiting for. So
there we go.
Thank God they're essential now.
Yeah. Let's say Rena is asking a question. Do you think the interest rate could get higher in the next months because home prices will go down?
No, interest rates are a lot closely tied to not the housing market, to investing market, money, where the money's at.
Yeah.
Stock market, bonds, oil. No, I don't think that'll have an effect. I think if anything, if they wanted to spur buying, they would drop the rates to spur some buyers to get back in. So I highly doubt it will be raised.
Yeah.
At least.
So, and again, interest rates are not also, pricing has nothing to do with interest rates. And same way that interest rates have nothing to do with pricing. Pricing is dictated by demand and supply. And currently we still have the demand because we have under supply. We don't have enough homes. And imagine, like, for this couple of months, new construction couldn't do anything. So all those homes that were supposed to be closing, let's say in June, July, all those closings are going to be pushed out probably to September. Okay. 2 months of no new inventory added. Imagine that. What is it going to do to the housing market? Well, in the primary, in the secondary, that's a different story. But let's say new construction, it's all going to be, Tammy's asking a question. Any advice on Helix as to what terms should we expect to see, agree, interest rate expectation, and which companies tend to offer the best rate in terms? So you may want to respond to Tammy. You probably see the chat as well, right? The question?
Yeah, I can see it.
Yeah.
So HELOCs, the rates on HELOCs are substantially less now that the Fed dropped the rates. Because like I said, Fed rates are closer tied to short-term money. And typically a HELOC is going to work like this. The first 10 years is your draw period. That's where it's going to be an interest-only payment required. You can still pay principal as well, but only required is interest. And you're going to see the rates probably, I'm going to say in the threes, low threes to mid threes. But then after that 10-year draw period is up, it converts into a 20-year amortization, and it's locked in at that principal balance. You cannot draw on it anymore. As far as where you're going to find the best rates, each bank is going to have their own little special they're running for that month. So a local bank would probably have a special running at, let's say, let's say 3% for the first year. And then after that, you go into prime plus 1%. So right now, prime is 3.25. So they might have an introductory offer at 3.0 for 1 year. After that 1 year is up, you bump up to whatever prime is at the time, but let's assume prime stays the same. You'll be at 4.25. And I see another question about how high could the HELOC go in terms of LTV. Those banks are probably going to allow, I mean, this is a thing that each bank, each mortgage person is going to be drastically different. I'd say you're going to find the average around 80%. We have some that we can go to 85, and we have some that we can go to 90, but those are our brokers, our wholesale lines that we use. So typically we only use those on like you were talking about at 80-10-10. We would use one company that I use primarily, TCF is the name of the company. They go to 90% with us. Another company we use, if we have to go to 90, we can go to 95. So they can do a 5% down and get into jumbo territory and still, but that's going to be a higher rate. That's probably going to be like 5%.
Okay. Yeah, she wants you to text, Maria Spasic wants you to text that. Yeah. How high would you go in a HELOC, So no, we just had a question here from somebody from Maria. She's asking how high would HELOC go in terms of LTV, and Brett just answered that, and she's asking him to provide the names of the companies. So that's what he's doing. And you guys, if you have any questions, you should ask them here because we are talking to people and people asking questions. And if somebody actually wants to speak, raise your hand. I'll put you into talk with me and Brett and Brett. Yeah. So yeah, he says we use TCF Bank and Quorum for piggyback HELOCs. They go to 95 and 90% LTV. So you can get some cash refi, right? Cash out refi.
That's another thing I was going to bring up is right now, if you're going to try to get cash out, getting cash out, especially if you're jumbo, it's going to be very, very difficult. You probably should go with a home equity line of credit.
Let's look at the other situation. What's up with investment properties? Can somebody still buy an investment property? Let's say I want to buy a rental. So how does that work?
So if you're under conforming loan limits, let's say King, Pearson, Snohomish County is 741, 500. If your loan amount is under that, you can still buy an investment property. It's going to be 20% down. I checked before, and we have the ability to go 15% down. However, the amount of points that's needed to get the rate,
so it's not worth it.
Doesn't even work. So you'd have to do 20% down, and even then, you're probably going to spend about 3 points in origination fee to get it. The other issue you could have if you did less than 20% down is the MI companies right now are tightening up big time. So just because the lender says yes, if the mortgage insurance company says no.
No, but it was all the time. If you want to buy investment property, it's usually a 20% down payment. So, but about the rates, what about the rate? What rate can you expect? Let's say somebody with 700 plus grade score, what rate can they expect on investment property right now?
I just ran one today actually for a client we're going to do an 80-10-10 on it to get him up a little bit over the,
You can still do 80-10-10?
yes, with
Oh,
one of the HELOC companies. So it was 4.375. That was the
pretty
highest
good.
with 2 points though.
Oh, okay.
0.375 at 2 points was the best I could get the rate fee combo. And the HELOC was 5.5.
Okay. Okay. Got it.
Anytime you talk investment, rates go up, points go up, right?
Of course, of course. Would that matter if somebody wants to buy a multifamily like a duplex, triplex, fourplex?
Yeah, I'm gonna check. And that's the one thing I was talking with you before. I still need to check.
Yeah, yeah. Before the webinar, we were talking about the multifamilies.
Yeah, that's typically those were 25% down. I'm gonna check on those and see what they've changed to now.
Multifamily is actually 25% down instead of single-family residence for investment, right?
Right. What used to be 15 and 25 is now still 15, but good luck finding 15% down to work. So now it's more like 20 and 25.
Got it. Well, which still actually, if man, there are other ways you can do it, but if you want to buy investment property, that's how you do it. Or you can do,
Things are just getting tighter on credit score, to be quite honest.
Yeah.
The clients have a good credit score, so they're, qualified buyers, but reserves is another big one they're going to start to tighten up on.
So Elena is asking, she's actually with our company, with Nexus Realty. Do you think it will be more difficult to get mortgage within a couple of months because banks will be more careful and will not want to take a risk?
I think what we're seeing right now is we've hit the worst of it, in our opinion. Meaning, right now is about as tight as it's going to be, unless everyone keeps applying for forbearance months and months and months. Then I could see things tightening up. But right now, 620 on an FHA loan is still, it's tight, but it's not unreasonable.
Yeah.
I don't see anything getting much tighter.
Yeah. So basically that answers it. Yeah. And frankly, the economy, not the economy, but whatever the health experts say, we should be going back to, to reopening the America back again, probably in another month or so. I don't know. I hope it's going to be less than a month, but we'll see what happens, but you never know with this thing, I guess. But if you have people who still have jobs and looking to buy, you should talk to Brad. You should get a hold of him. He's on Facebook, and you may want to, Brad, share your phone number and how people can get a hold of you.
Yeah, I'll go ahead and email that or put that in the chat box.
Yeah, it's 206-931-9499. So anybody wants to get a hold of Brad to get a pre-qual or speak with him about, or send him an email, brad.overland@movementmortgage.com. She said, I'll be calling you, Brad. Yeah.
Happy to help, and appreciate you taking the time out here, and congrats on the success with Nexus and VirtuDesk, man.
Thank you, brother. Thank you. Yeah. All right, guys. We'll just be wrapping up, so we don't want to make it like drag down, very boring. Just wanted to have people give some ideas as far as what's going on in the industry. And if you have any questions, please feel free to reach out to Brad about financing. As far as real estate, all real estate brokers, if you have any questions, I'll be happy to answer them for you. Consumers, if you're looking to buy, reach out to Brad for pre-qual. And if you need a real estate broker, we can put you in touch with somebody. All right, guys, we'll be wrapping it up, and wish everybody good luck and stay healthy out there.
Yeah, have a good weekend, everyone.
All right, guys. Bye-bye.
Bye.